take heart. Canada's housing market hasn't been this stable in years.
What do you mean? The bubble hasn't burst yet?
The bubble has not burst.
The market hasn't crashed? What do you mean it's
Right?
stable? All the headlines, not all the headlines, but there's so many that say like, oh, we have like too many condos in Toronto to sell, or the market's dead in like Vancouver.
Yeah.
Luxury market.
Yeah. And that has not changed. I don't mean Vancouver, I mean Toronto. So here's the deal. What I just read you came from the Financial Post, and that's the headline of the article that we're going to talk about. Okay?
Yeah.
Now, before we get going in that, take a quick sec, like and subscribe, helps us out. Let's go. All right? I'm going to read some things right out of the article, and then we'll talk about some different parts about it. Here we go. Canadians have been watching the housing market like a hawk since the Bank of Canada began cutting interest rates, hoping for a rebound from post-pandemic doldrums, pardon me. So that's the preface of it. Let's see what's actually going on in the market, okay?
Awesome.
So the market has been called stagnant, stalled, soft, and have become some of the adjectives used to describe it. But this economist, so this is the chief economist at BMO, this economist has another word: stable. Stable.
Wow, this economist is looking at the numbers.
That's correct, yeah. So here's what they're saying. With home sales holding at reasonable levels, new listings rising but not flooding the market, and prices steady, the stability describes the Canadian housing market, said Robert Kasevich, senior economist at BMO. The sky is not falling.
Right, we go back to that, and it's not even like we've got a bit of a post-COVID hangover for sales.
Yeah.
Right, we had a whole rush of sales, and if people didn't sell their home, buy another home, we need more space. We got to live with each other a little bit better. We're gonna have more room.
Right.
People renovated their homes.
Sure.
Right. So there was a big rush to do a lot of activities, and then what happened when COVID was over? We went from not traveling. All of a sudden, we were spending all that. If we didn't spend it on renovations, we spent it on travel.
Yeah.
We got out. We got to restaurants. We supported the economy.
Yeah.
And now it's sort of a bit of a hangover.
Yeah.
Right now, like people that are in their homes, like we didn't have record amount of sales, but we had a high amount of sales over that time. So obviously, there's going to be less activity afterwards if the rush already happened.
Yeah. Yeah. Okay. Let's continue on. Considering the massive swings in prices, activity, and interest rates in recent years, this is an outcome that the industry should be thrilled with. All right. So what does that tell us? Just in general, it tells us that this balanced market offers some stability. Some markets are still going to be, and here's the issue we've said too, when you're dealing with a massive geographic area like the country of Canada, it's not the same all the way across. So for example, Vancouver is going to be in what is now considered a balanced market.
And even inside that market, not everything is the same either. Like the condos might be a buyer's market, but detached homes might be a balanced or even seller's market.
Right.
So just putting that out there.
And in Alberta right now, there's more of a seller's market. In Atlantic Canada right now, it's more of a seller's market because investors are going to those markets, or people are moving to those markets as well. So, so let's talk about. I thought this was one of the best points that was made here. So, what about the so-called mortgage renewal cliff? Remember, everybody's gonna. It's like mortgage renewal time, and the end is coming. And
I guess we'll still see, because not all of the mortgage renewals have happened yet. And I'm not saying it's not serious. I just think it's blown way out of proportion.
Yes,
that's going to affect a smaller amount of mortgage holders right now. over the next 2 years.
And I agree. And I'm not saying that the reality is someone's going to be paying more for their mortgage payment than they were before. I'm not saying that that's not the reality. However,
Yeah.
let's read this. So far, the so-called mortgage renewal cliff has not brought a rush of distressed sellers to the market. In fact, according to Canadian Bankers Association data, more than 99% of mortgage holders in Canada are in good standing, a delinquency state that is significantly lower than the United States and the United Kingdom.
Right. So if we look at that in real numbers, and I don't remember the exact numbers, but it's even more than 99%. I believe there's about 5 million mortgages in Canada right now.
Yeah.
So think about it this way. There's about 15 million and a half households in Canada. There's 5 million mortgages. What does that tell you about the rest of Canada? We only have a third of Canada leveraged.
Yeah, the others have
that
paid
have
off
a mortgage,
yeah,
right?
the others have paid off their mortgages.
Okay, so and then out of those 5 million mortgages, there's about 9,000 delinquent mortgage holders. So let's call it less than 10. That's how small the number is.
Right, sure. So let's continue on from there. With new listings up slightly and sales down slightly, the sales to new listing ratio sits at 52.7%, firmly in balanced territory, said Kavsich, nationally at least. So remember, it's going to be different as you go through different parts, but they're giving a national number.
What was the number? Sorry.
52.7%.
And the reference was?
So new listings up slightly and sales down slightly. So the sales to new listings ratio.
Sales to new listings ratio.
Is at 52.7%. So what is that? Let's put it together. So the balanced market has kept prices in check, but is that really, here's the great line, is that really bad news?
No, not at all.
Not at all.
So they're talking about like monthly. There's a certain amount of new listings. Those could be homes that have been taken off the market, put back on the market, canceled months ago. They tried during the spring. Now they're going to try again later. So they're counting the introduction of new listings every month compared to the amount of sales every month. And this isn't always easy to find, and no one counts the current. No one counts it, but it's just not as published as much until you start digging into it.
Yeah.
So out of all of Canada, there's about 180,000 listings, residential listings available for sale right now.
Yeah.
And so as at the end of July of this year, so we're in August right now, there was about just a little less than 40,000 sales. So when we talk about like how many months of inventory, we have just less than 5 months of inventory.
Right.
That translates into 22% of the market selling if we're taking the July number, 22%. This isn't bad at all. This is, like the article says, this is quite balanced.
Yeah.
If it looked like we had like a 9% absorption, 10% absorption, so cut that number in half. If we had 40,000 sales to give us 22%, it's going to be like 18,000 sales, 17,000 sales out of 180,000 listings. Now we have about 10% absorption rate, which would put us back into like 2008, 2009 territory where the market was actually slow.
Right. Yeah.
Where there was like no motivation, there was no sense of urgency.
Right.
Yeah. Right now we have the luxury of a little bit more time to make decisions, not like when it was COVID. We had absolutely no luxury of time.
Yeah.
And a lot of decisions were made based on emotions, and we didn't have a lot of, it's all that fear of missing out.
Yeah.
And, maybe there's a little bit of that slightly keeping the market going, because I think everybody still sees real estate as a good long-term investment and hedge against inflation instead of paying for rent that's going to go up and up over time.
Sure.
So, anyways.
Yeah. Well, no, that's basically where we wanted to get to today. I just thought this was just a really balanced look. I mean, it's a balanced market, but a balanced, not run out and buy something and not go hide. A really balanced representation of what's going on right now in the real estate market in Canada as a whole. And we've said this before, as it takes time for the interest rates to have an effect, right?
It does, yeah.
So there's going to be another drop. The expectation is there will be another drop coming in September.
And maybe even October, yeah.
Yeah. So as those happen to stimulate the economy, we may not see the results of that until spring of next year, right? Because typically it's 3 to 6 months or longer after an interest rate adjustment before you see the effects in terms of what it does. So I just appreciate finally reading something that it's not all doom and gloom, and
it's pretty level-headed.
And it's level-headed. Yeah. Somebody's thought it through, and I would agree with most of what is in that article, and makes sense to me, right?
It's funny that we have an economist that has some balanced view on it, when some of these articles have it's the vice president of this broker, real estate brokerage or a mortgage broker company, and it's I don't know where they're getting information from, or they're just misinterpreting what they actually see.
Yeah.
Are they so removed, high level market? And this was a high level report across Canada. It wasn't harping on, listings are flooding the market, and then really when you start reading the article and the commentary, it's about Toronto condos.
Yeah. And I would say the one thing that they do address in here fairly is they said single family home sales are up in Toronto by about 3%, but the condo market is flooded right now with new condos. So that's balancing things out. So we didn't look at that in this article, but he addresses it to say that it's not just one or the other. There's two parts to what's going on in Toronto's real estate market. More than two parts, really. But, right, you have the new condos.
Yeah.
But that are sitting, but you still have people buying single family homes, and those sales are going up by a couple of percent.
The detached home in Canada is still the Canadian dream.
Yeah.
We don't really want to live in apartments. We don't even want to have a tenant in our house to be a mortgage helper. That is not the dream. It's kind of annoying to have a tenant. I haven't had a tenant for, 10 years or something like that, right?
Yeah.
It's stressful having a tenant. And I can't speak to the other provinces, BC. We're almost creating the single family detached home to be an endangered species.
Well, yeah, the thing I would say about BC is I wouldn't want a tenant. How's that? I'll just leave it at that after the latest changes to legislation and everything else.
But the push for rezoning from the province onto the municipalities, which they don't have a right to do that, but they can hold a carrot over every municipality with money, with the power of the purse.
Yeah.
Right? So to incentivize to build $1 million townhouses or
Sure.
a suite in a fourplex or something like that, where it's not going to solve affordability, but it's going to remove more detached homes from the market, making less and less of them.
Sure.
So what do you think is going to happen to the prices of single family homes? Not overnight.
Yeah.
But there will be fewer and fewer available. It's just like how many ranchers are more expensive. Get totally off topic. Ranchers are more expensive overall. They're more expensive to build per square foot cost.
Yeah.
And there's a lot less of them. And then as the boomers would like accessible, we're going on about the boomers again. The boomers want an accessible properties.
Of course.
No stairs. They're thinking long term.
Sure.
They got rid of the big family house. They want to go to a 2-level, 2.5 bedrooms, 3-bedroom house, in case grandkids, guests come over still.
Yeah.
Right? But it's one level.
Yeah.
Try to find one.
Oh.
Again, so they also
go fast.
sell for more per square foot than it does the same 2-level house.
Yeah, and they sell faster.
Right, because of scarcity.
Right. So, all right, well,
we could go on.
We could keep going on and on, but that's it for today. Give us a like and share. See you next time.